Hey everybody, welcome to the free video. So the dollar index continues to push higher. I do think that this has ominous implications for the market as a whole. Remember, we've got a daily squeeze here that's already gone and a weekly squeeze that has yet to fire. And if we back up here a little bit, you can see that we're not that far off new decade highs. And if we switch to a monthly chart, keep in mind there's a squeeze setting up here as well. The last time, and remember, it takes years for a squeeze to develop on the monthly charts, and it's been about 2 years now. And the last one, you can see we went from like 80, around 80 up to 100. Okay, that was 20 points. And if that same kind of symmetrical move happens, this thing's going to explode, and it's going to be a disaster for a lot of markets. And this is, I mean, first of all, obviously other currencies, Canadian dollar, Australian dollar, euro, British pound, would all get pounded, okay? But also think of commodity prices. If the dollar explodes higher, commodity prices get trashed, okay? And then while, say, a lower currency is good for the European Union, it makes their exports cheaper, for the US, the problem is more emerging economies where they've got to pay their dollars in debt. And so it's like having an adjustable rate mortgage. If the dollar goes higher, then suddenly it's like, wow, before it took 1,000, it took 1,000 of our currency equaled, say, $1,000, but as the dollar gets stronger, it may take 1,200 of their currency to get $1,000, if that makes sense. But it's like an adjustable rate mortgage. You have a payment of $1,000, and the next month it's $1,100, and the next month it's $1,200. It's like, man, that's not really something you plan for. So that can destroy emerging economies. And then also too, if the dollar goes higher, it hurts commodity prices. There's a lot of industries out there that are based on that, and anyway, it can wreak havoc. So this is the biggest development that's happening now. The reason this is going higher is that the markets are pricing in a rate hike in December. Okay, so it's already preparing for it. The dollar's already reacting to it, and you can see even the bond market here is just getting destroyed. Okay, so just think about the implications of that, and going forward, and that's the kind of stuff that we look at. So lots of big picture stuff there. For smaller picture stuff, continuing to watch stocks like Google here. Google continuing to trade sideways. Remember, we got a lot of earnings coming up in 2 to 3 weeks. Google, Amazon, Apple's, and you got squeezes all over the place. You got volatility all over the place, and it is going to get hairy. It'll be a lot of fun. Now, I'm going to be covering both of these things in the Saturday class I'm doing tomorrow on the 15th. Now, if you can't attend this, it will be recorded, but just so you know, what I'm talking about with the implications of the dollar, big picture things like that, I'm going to be going over here. But more importantly, we're going to be talking about specific strategies of how to trade a whippy market, okay? First of all, with the election coming up, the markets are going to get whippier. More specifically, as we do this live trading here, so the Saturday class is just $497. The live trading is $997. That includes the Saturday class. But we're going to have 2 full days on the 18th and the 20th during the cash session, okay? And we'll be doing options and as well as futures and forex and things like that too. But in that class, or in those live trading sessions, we're going to be trading the strategies that we learn here, okay? And there's basic things for trading whippy markets, which I'll show you here in a second. But also, we're going to be trading the 8th and the 9th. So on the 8th, we're going to trade from 12 to 3 Central, so the last 3 hours of the close. And then we're going to break out the wine and trade from about 7 p.m. to whenever the markets kind of stop moving, because it's going to be election night and people are going to be going crazy. And then on the 9th, I'm expecting that to follow through, and we're going to continue to trade live there. So obviously during this evening session, we'll be focusing more on futures and forex, but on the 12 to 3 session here, on the 9th, and then on the 18th and 20th, it'll be heavy into options, and we'll also be trading earnings and things like that too. So for those of you that have not traded what I would call whip trades, okay, there's a couple of different setups that I like to do. A big part of it is when the ADX goes over 25, okay, we'll be looking at that. We'll be looking at positive and negative DMIs, and you can see here's a whip trade right here. Boom, explosion higher. This whip trade, boom, quick fall lower. This whip trade, explosion higher. And of course, you want to use a tick chart, okay? You want to do a tick chart. You also want to do OCO bracket orders. And this is the kind of stuff we're going to see. Now, you can trade this on stocks, obviously during the cash session, but also in the overnight session, it's going to be critical. So that is the kind of stuff we're going to focus in on the Saturday class. It'll be Raghi and myself. By the way, bonus is that Raghi, if you're newer to currency futures and things like that, at 10 a.m., she's going to do a bonus session that takes you through the basics of the currency markets. Also, part of your homework and part of this is that you do get a copy of a beginning futures course that we did in case you're just not familiar with them. Okay, from there, we're going to be learning those setups Saturday, and we're going to start applying those during the live trading session, specifically gearing up for what I would call an election night party, which will be a lot of fun. Okay, you guys have a lot of fun. Looking forward to seeing you on the class, and we'll see you at the next update.